Let's move on to another important topic. We've seen block deals worth $2.4 billion in this month itself. You heard it right, $2.4 billion. Yesterday was Sapphire, last week we had Landmark, and of course, so many more. What's behind this heightened deal buzz? To discuss this and more, we're joined by Subhrajit Roy, the India head of Global Capital Markets at Bank of America. Subhrajit, thank you very much for joining in. This is Rima here. So, when promoters, large marquee investors come to you and they say that we want to exit or sell part of our holding in a substantial amount, 3%, 4%, what's the rationale behind this? Are they uncomfortable with the levels that they are seeing in the markets and they believe there is a downside? Are they doing it to raise money? Can you explain what's going on in the minds of the promoters and investors as they are rapidly paring down their holding or taking advantage of the heightened levels right now?
Sure. Good morning. I think a great day to have this call with markets reaching all-time highs. I think if you break it up into sellers being sponsors versus promoters, sponsors for them, this is a regular monetization strategy they will have, and they would tend to have their own horizons and thresholds when they look to exit. And what we are seeing happening over the last month or two, frankly, while all of them come together in a very short frame of time, the fact remains is even the earlier part of the year, we saw about $2 billion of block trades happening in the first few months, and we are probably seeing another $3 billion of block trades happening in the last couple of months. I think what is important to note, it is a more thought through strategy. It's not linked to a specific point in time. A lot of the trades you're seeing happening over the last couple of months have been frankly in the works or in discussions for the past few months, for past 6 months, in fact. And many of those sellers who have come to market now, they have been trades in these stocks earlier as well. So it's not something which is necessarily triggered by the current market flow, but of course in a market like this, naturally, when there is so much inflow both from the FIs and DIs, it does help to kind of get trades together. On the promoter side, and again, you're not seeing too many of them, but many of those discussions probably preceded this market rally that we're seeing now. And this so happens that it came together all in a space of time, especially when the flows were looking placed to kind of deploy themselves. So I think it is more of a matter of time and everything kind of came together. But a lot of these discussions were kind of ongoing, and a lot of these trades, frankly, were a follow-through of previous trades as well in many of these stocks.
Well, hi, good morning, Subhrajit, and thanks so much for speaking to us here on CNBC-TV18. One way of looking at it would be there's plenty of supply. The other way would be there's plenty of depth in the Indian markets. The kind of flows, the selling that we've had, and it's being absorbed on a day-to-day basis. So that's pretty good as well. But let's focus on the IPO market. That as well has come back to life. We've seen a couple of small IPOs that have come about. But do you see that IPO market as well getting revived? Should we be bracing ourselves with $500 million, a $1 billion IPO in the coming few months, given that markets are still looking quite strong? Run us through the pipeline.
Sure. So typically, what you've seen is whenever you see such large flow of secondary market transactions or even primary follow-on offerings, they're typically precursor to the start of the IPO cycle. We have seen of late, some issuers looking to catch the pre-election window, if you will, which is kind of, let's say, Q1 of next calendar. Because as you know, people will take a pause through Q2 of next calendar, and we're kind of looking at a pre- and a post-election season. Clearly, there have been few discussions where people are looking to prepone or look to go to market or being unable to go to market around the Q1 of next calendar, which kind of needs them to start working pretty much now or in the next month or so. So as the market strengthens, we would expect some of the issuers who have already filed probably looking to tap the markets again. And some of the issuers are probably sitting on the fence, looking to start the work so that they can give it a shot to try and hit the market before elections. But having said that, a lot of large IPOs will probably still end up being a post-election event. But the volume of IPOs we do expect to increase between the last quarter of this calendar and the first part of next calendar.
Subhrajit, hi, morning, Prashant here. Just to go back to the blocks, which are happening. So broadly, roughly, it's difficult to be very precise, but how much of this, the sales which are happening because of, end of the fund life and money needs to be returned to LPs, and how much is it opportunistic in nature?
It is interesting, right? If you look at most of the larger trades that have happened, frankly, they have been the second or the third or the nth trade in the name. So this has not necessarily come together purely because the markets have turned or it happens to coincide with a certain threshold in the fund life. What has though happened is, given the fact that the flows have become far more broad-based, right? It is not just domestics and not some select FIs. I think we have seen a significant inflow from global funds, which were pretty absent and sporadic a couple of months back. Once you have those flows coming together, the ability to transact becomes much higher, right? Because they are looking for deployment opportunities and the sellers are out there. They have done trades. So I have not seen any of these to be really triggered by an end of fund life situation. Many of them have been pre-IPO blocks coming to market, have been coming to market. Some of them have already seen multiple sales. And I think you're seeing culmination of those happening when the flows are there to absorb them.
So sales, because I mean there is depth in that sense. I mean there is people on the other side in a much larger number. So ability to transact. Got it. Now just one more thing. These when you're seeing these sales, and I'm sure you're talking to people who are the sellers. What are they planning to do with the net proceeds? Are they putting it back? Are they looking at, because some of them are global investors, right? Lots of them. Are they looking at other markets? What's the plan? Broadly, if you could give us some color.
It is interesting. In fact, given the amount of flows that we see, and we probably had a 35-40% share of the block trades the last couple of months. I think what is interesting is a lot of the sellers whom we keep speaking to, many of them are even waiting out, acknowledging the markets are great to transact, but probably they would also want to find investable opportunities in India before looking to monetize and raise those proceeds. So we are probably seeing the guys who are monetizing, but there are probably equal number of guys who are kind of waiting on the sidelines, either because they feel that there is far more strength in those underlying stocks, or they would rather find opportunities to deploy before they look to monetize. But a bulk of it are global funds where it is a regular process of churning and monetizing rather than any targeted opportunity. Some of that flows will of course find its place in India, and I think we have already been seeing a pretty strong spate of private equity activity already happening as we speak, and that actually is kind of fungible, right? And also, given the overall thesis around China still evolving, India continues to be at the forefront of attracting these flows.
Okay. All right. Subhrajit, thank you very much for joining us. Appreciate you being here on CNBC TV18. Good chat, and hope we can speak with you soon again on a more regular basis as we get a color of what's happening in the capital market side. We'll take a quick commercial break here. Mitesh will be with us for some technical trading ideas. Stay tuned. That conversation comes up next.